Welcome. We have a lot to get to as we dive into the economic and stock market world. Now, things are really dynamic and changing, especially on the geopolitical front. So what does that mean? And then how do we react with that? And that's what we're going to be talking about afterwards in the portfolio trends and some changes that we're making. Then we're going to really wrap up with the advanced planning and some of the economic shifts that are going on and how we can be managing that within your wealth plan. So we have a lot to get to, and I'm looking forward to diving in, starting with number 1, economic and stock market risks. We're going to take a different approach today. I want to look at the positives and some of the negatives that are out there. So let's start with the positives first. With the government spending that has been occurring, they have been a huge economic influencer over the last year. Now, like I said, our government has really played a crucial role here in stimulating the economy, and they have significantly contributed to our GDP, while actually being one of the main employers over the last year as well. So this is something that has really been showing some resilience, government spending and also hiring. Now, what we're also thinking is that this trend may actually continue, but it also suggests that the private sector might soon start catching up with the government. And what this could potentially do is lead to a really, hypercharged job creation stage and also wage increases. So what that could really do is overall help our economy to grow even more. Now, the labor market's resilience that we've been seeing and the adoption of remote working and the sustained consumer spending is something that we have really thought that could be reverting back to the way it was over the last, say, 6 months, but that's not what we're seeing. And in fact, spending, even though we're putting more and more on credit cards at higher and higher interest rates, is still something that is going strong. So this really could influence our growth over the next year. Wow, that's a huge shift, like I said, from some of the thought processes that we have been looking at over the past year, and could be a major driver in some of the investment strategies that we're looking at as well. So that's the positive. But there's also some negatives that are still out there. And one of them is that the hangover from all of this government spending and all of the spending that has been going on just by you and I with respect to, the Christmas season, the holiday season. And what that is actually mathematically doing now is showing that there are some reasons for a GDP slowdown. Really what the data is suggesting is that this notable slowdown in our GDP growth for the first quarter is really what we're starting to be the most likely outcome and scenario. Now, what this is doing is showing a combination of slowing growth right now for the next at least couple months, as well as inflation. And what we call this is lead 4. And what this could do is signal a little bit more caution for the stock market, as well as the need for more defensive investments and some of the different aspects of the bond market as well. So that's something that we're starting to see and mathematically could really start to manifest here over the next couple months. But there's also the ugly side of things. So we have a positive, we have a negative, and then we have the ugly. And that's all that's going on with our geopolitical really just hardships around the world. And right now we've had even a worse time with respect to the maritime trade and all the disruption that's really starting to happen with marine traffic. Now, there's actually some really good websites that go through the marine traffic, and what we're talking about here is all of the shipping that is happening. And what's going on right now is there's a huge significant change with global shipping and all the patterns that are starting to emerge just because of the Red Sea. Now, as we've been following some of these trends, as we've been following some of the news, you know that MSC, Maersk, and many others, they've all halted the container shipments through this really vital corridor due to the increased fighting and attacks on container ships that are really starting to happen in this area. So the decline in this, as well as really the Suez Canal in general and all that traffic there, is really starting to put a financial toll on not only those companies, some of the other countries, and really all of the different aspects of the passage through this area that we're starting to see that is really starting to shift to the south of Africa. So now what's going to start happening is that this is going to start having a vital consequence, because we're adding, well, about 2 weeks onto the travel time of these container ships just to get them safely to port. And that alone will start to affect some of the supply chains and possibly even some of the economy and some of the market stability that we have been seeing. So I'm not saying that that's going to necessarily happen, but generally speaking, with just the thought process of adding a couple weeks to our supply chain, we could start to see some disruptions starting to occur again, in likes of what we saw back in 2022. So there's a lot that's going on right now, but that's why we really want to dive into some of the changes as well. Number 2, portfolio changes. Over these last few weeks, we've started to see a shift that's been occurring in the stock market. Healthcare and insurance companies are starting to show some resilience. And because of that, we're now starting to increase some of our exposure to those areas. See, these, like I said, are areas that are showing resilience and potential for growth in the future. But with respect to how the dynamics of all of the inflation is happening, the different ways that they can earn and make money during this current environment actually makes them quite attractive. Now, the other item that we're really starting to see is a shift away from some of the growth stocks, well, especially the Magnificent Seven, back to some value stocks. So ones that may have not gone up nearly as much over the last year. And what we're starting to see is that favoring of these value stocks over growth stocks, with a particular emphasis on smaller, more agile companies, can really make a shift in how people are, well, exposed right now, especially some of the institutions that are very growth oriented. So what that does now is offer some potential for higher returns, because as those really institutions have to sell off some of that growth and purchase some of the value, obviously that means they could have higher returns because of that. Now, the last aspect that we're really looking at here is what happens if, and we had not only the ugly side of things that I just mentioned, but also those negative side of things with respect to some of the growth. And because of that, the bond market has some significant opportunities today that it never actually had over the last, well, realistically speaking, about 18 months. So now the bonds are actually presenting more of an appealing investment, and one that can really help to guard against an economic slowdown. So here's what's happening. Because of the fact that we have a slowdown, well, that means that, well, the bond yields may come down. And because they're inverse to the price, if the yields come down, then the price may go up. And that alone could provide a good hedge against some of the volatility that we're seeing with not only the stock market, but also some of the other dynamics of and risk that's happening with the economy. Number 3, wealth management and advanced planning. As we flip the calendar to the new year, you may be making some New Year's resolutions. Well, that's why we actually want to be talking about something that really can be beneficial here. And I call this the law of reciprocity. Now, this is really not your standard wealth management and advanced planning type of feel, but this can really add value to all of the other areas that we talk about. And one of these things is the fact that this is something that the super rich do. So we're talking people with over $500 million. And what they do is understand the importance of adding value to others' lives. Now, when you help in this way, helping others find valuable and really ways that they can bring joy to their life, this is really something that can be applied to wealth management as well, and can actually proactively really start to spot opportunities that we can see. Now, when we support others in this manner, we can really foster a mutual beneficial relationship, and the relationships are what really matter here. Because when we start to do that, we can start to see how the law of reciprocity, us giving, can really start to show how others can be giving back, and that alone can be very helpful when it comes to the overall wealth planning that you're doing. So, let's talk just a little bit about this. The first element that we take a look at is negotiation strategies. And when we talk about negotiation strategies, the super rich really do employ a technique known as seeking the moon, but asking for the stars. And that really involves setting some high goals. And I think you've seen this in some presidents recently as well, how they try to shoot for the stars and then they pull back the ask and make concessions. And what this does is help them to achieve their goals. Now, yes, we've seen some presidents that have done this real recently, but that is actually something that is very, very helpful for you. Now, when we talk about how we can be looking to make really some growth in this area, shooting for the stars by what we ask for, but then going back, pulling back just slightly, can actually be very helpful when it comes to negotiations. But that's not all. What we're talking about is this reciprocity mindset and being proactive in some of the problem solving. So again, just like what the super rich do, they regularly seek out ways to offer solutions without being asked. Now, you can really enhance a lot of your relationships as well by anticipating some of the needs and providing solutions when the time is right, and understanding and leveraging the law of reciprocity in wealth management and what we are doing with respect to how to grow and preserve and protect and enhance, and all the different elements that come into some of the advanced planning. Well, that can be transformative. And what it allows you to do is really to achieve some significant goals and wealth potentially over the course of your life. So that alone is the reason why we take a look at some of the law of reciprocity and how you can be relating it to your own wealth plan. Number 4, our second opinion service. By way of reminder, our second opinion service is an invaluable way to really work with the people that you care about. The ones that are really looking to have a second opinion or even a stress test of their financial life in these uncertain times. So we're here to really provide some clarity and some confidence behind this is our goal, by way of saying that we can be having a couple different meetings. The first one would delve into some of the different aspects of where you're at today, where you're going in the future, and then it's our job to see if there's any gaps that exist. Now, in the second meeting, we'll go through and discuss and talk about some of those gaps and ways that we can be looking to solve them. So that is the second opinion service that's available to your friends, to your coworkers, your colleagues, even some of your business partners. So with that, I wanted to make that available to you, and let us know if you have someone who would like to have a second opinion. We've gone through a lot today. As you have questions, feel free to reach out. We'd be happy to talk with you and to make sure that your wealth plan is on track.